Mortgage Gumbo with Dwayne Stein.
Wanted to go to the mailbag here, and one of the questions that I did get was, what is the difference between a HELOC, and we're just talking about HELOCs, what is the difference between a HELOC and a home equity loan? Well, a couple different things. A HELOC is a second that is usually an adjustable rate, and it's tenured. It's usually 5, 7, 10 years. And basically what a HELOC is it's kind of like a checkbook for your house, the equity in your home, and you're able to get a checkbook that, hey, if there's some certain things that you want to use it for, let's say that you're a business owner and you just want a backup plan in case something happens where, hey, you've got to meet payroll or something like that. That's what a home equity line of credit is, okay, or a HELOC. It really should be used only, and I mean only, as a security blanket. But here's what happens. You know, most folks aren't disciplined enough, and that HELOC starts off where they've got so much money, and it's very attractive because the rate is so low that it's an interest-only loan for 3, 5, 7, 10 years, and it's very attractive. But what happens on a HELOC is at the end of that term, it does something called balloons, which means that it's called due, or you have to go by what the contract states, where then all of a sudden they're adding in margin. You're at whatever the different rate or the going rate is at that time, which, as we continue to talk about, rates are only going to go in one direction, folks, okay? We're seeing all-time lows still right now and lows of 2017, but they're going to continue to go up. But I had a client call me last week, and I mentioned, and I got to meet with her in person this week. Client last week who called, and rates fantastic. Rates are down, right? But here's the deal. Her balloon was coming due. So her HELOC, her home equity line of credit, was going from $600 a month to $1,000, okay? I don't care who you are. It's pretty hard to budget for a change of that magnitude. Okay, so from $600 to $1,000. That's why I don't like HELOC. So if you have a HELOC, again, folks, the value of your home, it's very hard. Chances are it's never going to be as high as it is right now. So take full advantage of that. Even with normal appreciation, it's going to be hard for your house to be at the value where you're at today. Okay, so take full advantage of it. Get off of that HELOC. So what is the difference between a HELOC and a home equity loan? A home equity loan, for instance, is basically a cash-out refinance. That's when we take that same equity that's in your home, except we use it to pay off debts, maybe credit card debt, student loan debt. Hey, maybe you need some cash because you want to do some upgrades or something like that. That's what a home equity loan is a cash-out refinance, except it's on a low fixed rate, okay? And you still just have one mortgage. You can do them as a second mortgage, but again, I do them, we refinance them, we put everything together, we do one simple mortgage. Again, so a lot of what we're doing right now, when you're looking at 3.25, locked in several people in the beginning of this week who bought some points and were able to get under 3%. We were able to get them down to a 15-year note. So the biggest difference, home equity line of credit is an adjustable rate second mortgage that is going to balloon, and a home equity loan is a cash-out refinance on a fixed rate where you take out the equity in your home to pay off debt, and a lot of times helps you save a lot more money. So you're not adding debt, you're removing debt, which in turn saves you.
Mortgage Gumbo with Dwayne Stein.